Welcome to this week's Cattle Call, being brought to you by the folks at the Home Agency. I'm Susan Littlefield. We're going to make you go back to your ag economics and just economics in general classwork that you might have done in college, because we're going to be talking a lot of what's happening macroeconomic wise, and why is that weighing in to what we're seeing in this market. I mean, aren't we trying to trade cattle? We're going to find out about that. We're going to talk about the toughness of this trade, of what's going on. As you can see, Brad Kooima joins us. He's with Kooima and Varilek out of Sioux Center, Iowa. It is a tough market. We thought Tuesday was a tough day. It just kind of rolled into Wednesday being a tough day as well. What's your thoughts?
Well, thanks for having me on, first of all, Susan. And of course, not every day is rainbows and sunshine, right? So we've had a couple of difficult days, more than a couple maybe, with the market. That you're right, in your little intro there, we really aren't trading cattle fundamentals. I mean, there isn't something that's vastly different. We didn't all of a sudden sprout 3% more supply or something like that. In fact, indeed, the cattle and feed report that happened between the last the last time you and I visited was wildly neutral, and the placement breakdown was actually a little bit supportive and friendly toward that first quarter supply time. So what we are trading, though, and this is reality, and people can go like, well, Brad doesn't know what he's talking about, and you're probably right, except I would probably want to argue pretty hard. Unfortunately, on this point, I've seen it over and over and over and over and over again, that when you get uncertainty in the marketplace, the cattle seem to be right in the front row, right in the splash zone at SeaWorld is the way I like to describe it. If there's going to be something that creates uncertainty on the long speculator, that they're going to worry about whether there's something that's going to change from a demand perspective. For some traders anyway, beef is still looked at as an elastic purchasing decision. In other words, something that they don't have to do. They can change their mind. Budgeting, different things like that can change it. So when you get into this deal that we've had here now with a steep break in the stock market, which a lot of this, unfortunately, is still impacted because of this inability of the government to do their job and make sure that we stay open. So that's a big part of it. The bond market suggesting to, more rating increases coming. All of that stuff, is what's creating some doubt. And so we got a fund community that's a pretty big long in the cattle, not huge, but a decent size. So yesterday in the sell-off, you saw a big drop in the open interest, and I would think that's the public and the funds coming out. And I would bet money that that's exactly the same scenario today. Now, before people start crawling up on the ledge here, we were a dime higher in October and 30 lower in December. I mean, we're not talking about, $6 lower like we were yesterday on the feeder cattle, which was a little severe. By the way, who thinks that's a good idea to have that big of a limit? Stupid, in my opinion.
Yeah, very much so. When you look at that and that whole limit issue, what do you see as some of the biggest concerns we might see for these cattlemen?
Well, the limit issue is particularly annoying to me because, in my view, and I'm not, they don't ask me clearly, but those big limits are for one entity, and that's for HFT algorithms, those fund type communities that they like volatility, and the CME likes commissions. Okay, they like volume. To me, that it's a great disservice, in my opinion, to the person like us out here are trying to use it as a risk management tool. To have the feeder cattle change $8 per hundred in value in a space of a few minutes is unnecessary, and I don't even think it's. I think it's irresponsible, frankly, is what I think, that there's even a rule like that. But we went through a lot of big things with small limits, and we got along just fine. I sat right in this chair and watched what happened after mad cow disease. 4 days we had it figured out. $17 break, no big deal. So anyway, that's where we're looking at now. Okay, after all this stuff about the uncertainty and the gloom and the clouds and blah, 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 there are still the same amount of cattle supply today that there was last week. Okay. Cash market in the South is steady at 183. It doesn't sound like a real wreck. I was bid 184 this morning, got 186 last week. I passed 184. We'll see if that's smart or dumb. But, it looks like the cash market is holding together. Yesterday, we killed 128,000 cattle. So it looks like you got a packer that's willing to take on numbers, right? So I guess I'm trying to offer a little bit of perspective that hopefully we get past this government shutdown. And even if we do, we could probably make a comment on that if we do get to the government shutdown. But it looks to me like the guts of the fundamentals of the cattle market are still all right. That doesn't mean you can't have corrections, which is what I believe this is what this is.
Well, you talk about the government shutdown. Let's talk about 2018, because I think it doesn't matter what we're turning on, radio, television, podcasts. Everybody's talking about where this budget's going to be and what it's going to mean going forward.
Exactly. And so it's happened before. We've had a number of government shutdowns, the longest of which was in 2018. And we actually had a couple of them in that window. It was in December, and I believe it was 33 or 34 days long. We missed a couple of reports. I remember that. But of course, I pulled up my charts then for cattle for that time period, and what had happened then, and that is no guarantee that that's what happens this time. But what happened then was we had about a 2.5, 3-day correction, broke about $3, and then we resumed the uptrend that we were in there. And actually, by the end of that period, we were at a price that was $3 or $4 100 higher on futures anyway than where we were at the beginning of the period. So there is some precedent to think that at some point cooler heads do indeed prevail. People remember that people still eat, and you still have to, kill cattle. Now, a couple of the things that go along with this shutdown is that time, and I would assume this time too, like inspectors. You can't kill cattle without a government inspector. Okay, at that time, that job was deemed to be critical or important. So those, even if it's shut down, those people still went to work, right? Air traffic controllers. I mean, there's different big groups of those people that you're going to go to work anyway. So hopefully that's the way that works this time as well. It's clumsy. You can't believe you're even talking about it. But I would say that it's very survivable.
We're taking a quick break in the middle of Cattle Call to talk a little bit of cattle information for our cattle producers. And joining me, Ben Rand from the Home Agency. And Ben, as cattle guys and gals are looking into fall and beyond, what are some things that you guys at the Home Agency want them to be thinking about?
I think first and foremost is we got to look out for the cow-calf operator when we're talking about looking forward to next year's cattle. For these fall calvers, we want them to get active. They need to be active sellers here. We're looking at 273, 74 for August feeders next year. That is a lucrative number. That is a number that needs to be protected. And I think we have an opportunity coming forward to really get our inputs down, specifically with regards to corn. We're seeing pasture come back, being green. We got a lot of great pasture that's come back. Hay prices have settled down. I think if you're looking forward to the fall as a cattleman, focus on your inputs, focus on your corn, and then protect some of these 270 numbers on the feeders.
So having this conversation with you guys is as simple as picking up the phone and scheduling a meeting. How do they go about doing that?
You can find me on Twitter. I'm at BenRam10. You can follow me, DM me, message me. You can call our home office, 1-800-245-4241. We love to talk cattle. We do it every day from 3:30 till 10 o'clock at night. We start back up usually about 6 o'clock in the morning.
All right. Give that number one more time.
1-800-245-4241.
Before we wrap up, you brought up cattle on feed report kind of at the beginning of our discussion. Did you see any surprises? And does that numbers tell you something going into this, what's left of this final quarter?
No, nothing that with a lot of drama. Maybe still a bit of a surprise to me that we still continue to have a lot of heifer population. And which I guess is, it makes you even a little more confident about the long term of the market because, like I've said before, we're not to the short numbers yet. I can show you charts of the heifer. I should have got that ready. That's annoying when I do that, didn't I? Put charts up. Like so, cow slaughter is pretty big. Whatever. Anyway, we don't make this stuff up. It's data. But maybe what was a little more interesting to a nerd like me that breaks apart those numbers a little bit more, the placements of 800-pound cattle and over was down 8%, I believe, of the 5-year average. So, and I wasn't quite ready to answer your question. I apologize, but the 800 pounders and over was down the most, which is still kind of goes back to that idea: are we going to have less yearlings? And if we have less yearlings, is that because there's going to be less heifers in that yearling mix because they're going to get saved to go back into the cow herd? It looks like the planets are starting to line up a little bit like that in the north, which would still make me think that beginning of the first quarter of next year, at least from a supply standpoint, unless we have some sort of economic Armageddon between now and then, from a supply standpoint, that still looks to be a pretty positive time frame.
All right. Lots of great stuff, Brad. What's the best way for folks to get a hold of you guys?
Well, look us up on our website. I think is as easy as anything. KKV Trading, kkvtrading.com.
And as well, I wanted to stress to everybody too, you get it because you have cattle as well. So you understand, you wear both hats. Appreciate you joining us this week.
You're very welcome. Thanks.
All right. And as we always do tell you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.